Welcome back to Top Down, Bottom Up. On the chart behind me, I have a picture of what we talked about in March with the S&P 500 starting to make a rounding or a topping motion. We said this is an area of a little bit concern and we wanted to start to dial back risk and maybe move to different areas of the markets like fixed income and bonds. We displayed that chart of a long-term corporate bond and we started to become more defensive, pulling back, sitting in cash, and taking the gains that we already had year to date because we had been doing very well compared to the rest of the market. Now I'll pause there because I'm sure that you all have been seeing the news and you've basically understood that the market has dropped almost 10% from its top. I will say that doesn't necessarily mean your portfolios have dropped that amount because we've been doing a lot of bottom-up buying that looks very different. I'm not going to spoil anything for Brian's bottom-up piece, but when you look at the chart behind me of the S&P 500, we think that we've come to an area in the short term that could be a bottom. The news cycle is starting to change. We're not creating new lows, and I think that we have a potential to move up here around 5%, and that could last over the next couple months. Now, this is a midterm election year, and I will continue to say this. There is probably going to be more volatility ahead. There's a possibility that we create a new low heading into around the September-October timeframe like we saw in 2022, but that could ultimately be the best buying opportunity that sets up the next move higher over the next 12 to 24 months. Now, I know that's pretty long term, but every portfolio decision that we make, we're investing for you. We're building your portfolio and trying to find opportunities so that we can set you up to help you hit your long-term goals. Now I'll turn it over to Brian for the bottom up.
Let's get right into the bottom up. Looking at it from a little different perspective this time. We'll start with fixed income bonds, and then we'll look at it from the equity side of things or stocks. If you joined our most recent webinar, you heard about the opportunities right now that exist in the fixed income space. So a lot of folks have taken advantage and added to their accounts to buy bonds because if there is a little bit of worry, that can smooth out some of the volatility that Jake mentioned in the top-down segment. So there's really good opportunity, in our opinion, in bonds for the next 5 years or so. Looking at the equity side of things, we've been very selective. And you've heard about in the past videos how we've been buying small caps and mid caps and very specific sectors, not the broad market. Now I want to tie that all together because if you look at your performance in your portfolio, chances are you're going to see something very different than what you see in the overall markets and how the overall markets have done in the first quarter of the year. You can check the Advizon portal to see how you're doing, but it's like this. If you had gone to bed at the beginning of January and just woken up now, you'd probably be pretty happy with how your accounts have done despite all the noise that you're hearing from the world and what's going on. Now, two last things. Number one, you can take a look at our stock of the month this month, which is Generac. You can read about that in Stock Stories. And we have another webinar coming up in May, which we're planning, and I'm not gonna spoil it, but you're gonna wanna join if you can, because it's gonna be a pretty special event, and we're all looking forward to it. Check your email inboxes for an invitation here soon. As always, this has been Jake and Brian, top down, bottom up. Stay in touch with Econ Wealth Management.